financial markets are odd in a way that things tend to be quite unstable, and there's this reflexive dynamic, this endogeneity within the system where, if everyone thinks a certain way, then the market will incorporate that and it will behave in a different way. So when you're trying to look for those relationships that hold consistently over time, do you find that as soon as you discover that they are consistent over time, they stop working and then it's something else that comes up? I mean, how do you sort of reconcile the kind of instability of relationships that you tend to find in markets?
Yeah, I mean, I think it's a good question, and I think those folks who are looking for very tactical descriptions of what's likely to occur in markets fall into that circumstance all the time, where something looks good for a little bit and then it doesn't look good again, and then the masses sort of say this is what we should be doing, and then the masses move on to another indicator like what's the indicator of the day, that net liquidity indicator, which like is looks like it is related, but wasn't related until a year ago, may not be related in the future. And so I think part of what I really focused on is, instead of trying to understand these sort of in fashion indicators, instead it's a lot better to understand things that over long periods of time will give you an edge, right? So just to try and give you that sort of 60-40 edge or 55-45 edge, not something that is going to be descriptive, perfectly descriptive over any time frame, over any instantaneous or short time frame. Because if what you can do is you can take those 60-40 insights, and what you do from there is you can bet on them over and over and over and over again. Well, then what you have is you have a higher probability of being successful durably over time. And so I think in a lot of ways, there's a lot of incentives for short-term sort of now alpha. And the reality is that I should say short-term, very high ratio now alpha is really what everyone is like trying to find out there. And instead, I think what you see, and what you see from the biggest, most successful asset managers, is slow alpha that's kind of good. Well diversified is actually the ticket to success. And so that's from a theory or an investment management perspective, that's really where I've focused my attention over the course of the last 20 years.